So here we are, usual next screener. On my left is the weekly layout, right on the daily time frame. The next price indicator and the next RSI indicator with their respective state of flows will definitely help us to understand and figure out what's happening where. Now, weekly, not good. If I take a look on my left-hand side chart, the Nifty weekly chart has given me a bearish Heikin, no upper shadow. And the state of flow has also turned negative. You can see very clearly how the state of flow has been changing. It's been volatile because of the range bound behavior of the market. Do we have a range breakdown? The answer is we can say yes. This was more or less the range where it was giving us some support. You've got a breakdown, you've got a throwback. And if I particularly talk about yesterday's session, it could have closed higher, but it slipped quite a bit towards the close, and the close was also not that great. Going back to the weekly chart, what should be our view? Yes, it's turning bearish. Now, just because of the word bearish does not necessarily mean that it is emphatically bearish and left, right, center, everything is looking bad. It's not a bear market. It's just that after a run up, every chart after it runs up, it cools off. And that's what we have right in front of us. It has just started to cool off. Whether this cool off will lead to a 4-5 weeks fall, whether any kind of a cool off like this will lead to much significant correction, this only in the future as we progress, we will be able to figure out. So we have to just collect the information, the price information, and position and strategize accordingly. So what is that information? It has just started to cool off. And so for a long only trader, it only makes sense to slow down. Slow down, careful, cautious, stay away, something that we've been anyways talking for like 6-7 days back once we saw this breakout slipping. And it turned out to be a good breakout failure. So before I go to the daily, weekly, slowing down, negative, long only traders, stay away. Daily, we've got some definite weakness. Every time the market tried to go up last week, it slipped. None of the Heikins have given us any kind of a meaningful bounce back. State of flow is still very much negative. We have a 2-bar positive reversal divergence possibility followed by an HHGB. This does not guarantee anything. This only tells us that this one-way selling is facing a bit of friction, volatility, choppiness, consolidation. Such consolidations can definitely open up further on the downside, or they can also reverse. Only price will confirm that, what it is going to do. Just because there's a 2-bar divergence does not guarantee that it will go up. It's just telling us some way or the other, it's definitely going to open up. Considering the extent of the fall, considering we had a breakdown, a consolidation is very much likely. A consolidation, which we are going through for the last 2 to 3 trading sessions, is very, very likely considering we're just giving the breakdown. And so, it's okay. You're consolidating. Whether you will bounce back or fall further, how will I figure it out? So from level point of view, Friday's high, extremely important for any kind of recovery. Unless Friday's high is breached, I don't think the market will find any kind of footing to bounce back. On the other hand, if Friday is low or these lows, which were Monday, Tuesday, these lows are broken, then you're headed for another move on the downside. I have been particularly sharing this with you that breakout failures lead to one leg of downside. It's difficult to pick this leg on the downside because that is like a contrarian bet. You're trying to pick the top. But after it consolidates or pulls back, the next leg is more probable, much more easier to identify, and it's much more tradable. And if the next leg comes after a breakout failure on the top, then this next leg generally is vicious, is generally pretty sharp. So considering the daily chart, adding with the weekly, it clearly tells us be very careful next week. If you're a long only trader, the sentiment can only just improve a little bit if prices goes above Friday's high if prices close above Friday's high, or else, continue to stay away, continue to be on the sidelines. This is not the market where you can find momentum upside. Yeah, because the market is falling, of course, your contrarian mindset may kick in. If you're a contrarian trader, that the market is falling, I want to buy cheap, then you have to change your mindset from a momentum trading to a contrarian trading. I generally suggest to stick to only one mindset, either contrarian or um, anything, breakout or swing trades. And so, short term momentum traders, long only momentum traders, stay away. You can use your contrarian strategies to find some opportunities. That's the kind of market we are in. So, your momentum trading switch goes off and your contrarian trading or investment switch goes on. This is where you will try to find some sector or some stock trying to bottom out. We're in small caps. Same story for the mid cap, which was relatively better. It was at an all time high. Negative bearish Heikin on the weekly. We do not have a negative state of flow yet. Um, daily has come off, given a bounce back, at least a green bodied Heikin we see on the daily time frame. But the story is clear and simple in front of you. This is the range, this is the breakdown, and it has slipped on Friday's trade during Friday's trade. So, not that great. Small cap, anyways, was underperforming for a very long time and it continues to underperform. Nothing really changes at our end. We had decided to stay away from small cap and it stays as it is. Now we take a look at the sectors. Before we take a look at the sectors, we always bring in our RRG and figure out the change of relative strength. So here I am on the strike analytics page. Let's go to the RRG section. I will select the 16 sectors on my watch list. I will change the benchmark from Nifty 50 to 500. I will change the time frame from daily to weekly, and we'll increase it to around 10-15 weeks, around 14 weeks. It's fine. Do we have any perspective from the Nifty chart? Like we generally take a look at the Nifty count and we try and figure out what's happening. I think last time we did some 40 count and all that, 40 days. It'll be a biggish count if I count from where is it? Yeah, if I count from this to this point, I'm gonna get around 22 bars. That is from this particular low. But let me reduce this, and let's say if I count this one, that is since the time it decided and it went into this consolidation, low to low, this area, where the markets essentially has not gone anywhere in the last 10 weeks. Let's try and figure out where the other sectors have gone and what kind of relative strength. So this week, let's quickly do a count of 10. See, the count is not going to change the positioning. It's just going to reduce the tail length. So we'll understand. So 10 weeks, the Nifty, the benchmark Nifty, has not done much. Now let's see who's done what and how. Nifty Metal. We're starting with the leading quadrants, 14.37%, followed by IT, Nifty Bank, Private Bank, Financials, Midcap. This is so good. This is so promising. It's just that we hope that this relative strength continues for these sectors. We have Bank Nifty, we have private banks, you have IT, you have metals. If they continue the relative strength, they are in a leading quadrant. If they continue, the market will find support. So this is a good thing. But that's not getting reflected on the Nifty or the overall markets. The Nifty continues to slip. IT did try and support in yesterday's trade, but the Nifty slipped towards the close. So let's take a look at Nifty Metal. And Nifty Metal with auto, if you remember, these two sectors were cooling off. They had relative strength. They still have relative strength. They were losing the momentum, and now it's a U-turn for them. It's just gone back. And that's why relative strength is extremely important. Whichever sector, or if you do RRG for stocks, whichever are on the right-hand side, that is on the leading or on this weakening, they have relative strength. And if you find the trend to be positive, they are typical bounce back candidates. And that's exactly what metal has delivered. Let's take a look at Nifty Metal. Nifty Metal, CNX Metal, we had kept our green flag, I think, for quite some time. And weekly continues to rally. Beautiful state of flow for the last 5 weeks. No problem. Coming down to daily, it gives you a short-term correction. I had spoken about LFDF, 2D, 3D kind of a setup. If you're aware of the new LFDF 3D strategy. And I'm pretty certain that many of them would have worked in your favor. This is a no-brainer, actually. But it's a no-brainer and it's easy to see it on the hindsight. But at this point, one needs to have that conviction to go for those trades. So metal stays green. There's no second thoughts about it. IT. IT is something that has supported the overall market for quite some time. And it is picking up. It is definitely picking up further. The move of the IT RRG is brilliant. If I increase the 10 weeks to 20 or 30, you will remember that it was here and it was gaining some relative strength. And now it's positioned beautiful. Every time I take up RRG, I have to say this, that I personally love any RRG which is angling like this. And IT is angling like that. Gain of relative strength? Yes. Gain of momentum? Yes. So it's a relatively strong sector. Come and take a look at the CNX IT. We had gone neutral on IT, particularly because of a 2-week fall and wanted a proper state of flow. And so last week, or particularly yesterday, Friday, because of earnings and large cap stocks, especially one of them giving an exceptional move, we have a big revival, all of a sudden a revival. We were neither bullish nor bearish on IT. We wanted to stay away and wait for some clarity. Do we have that clarity from the weekly? To be honest, no, because Heikin has both the shadows for the last 2 weeks, red body followed by a green body. Daily, of course, will improve. So we will still maintain a neutral for the CNX IT index. Stocks may differ. If you go down to the stocks, you might find positive state of flow on the weekly. That's a different story. But index as a whole, I think we should give it some time. And that is completely fine. Why? Because from where we had the recent 2-week correction, that's exactly where the market had topped out in the past. And these are perceived resistances. These are anticipated, expected resistances. So if IT has to do what auto and metals or PSU banks have done, if we are looking at some kind of a turnaround for the IT stocks, then we should be looking at a breakout, a successful breakout. It might give us some throwback consolidations, but if we are anticipating for the next couple of quarters at least some kind of a good move from IT, then we should not be in any hurry right now. Because if that happens, our weekly state of flow will again go positive and will offer us opportunities. So no problem there. IT neutral. We'll look it out for another week or two. And once our weekly state of flow goes green, we change our flag. Simple. So let's see whether IT sustains or not. Also, earnings season. We have to keep this back of our mind. And let's see what's the guidance, what's the narrative, and accordingly we'll position. It's not that we decide on the guidance or those fundamental numbers. We always decide based on price. What I'm just trying to say is let's not be in a hurry. Now let's talk about Bank Nifty. If you remember Bank Nifty, Private Bank, PSU Bank is an exceptional story, but the Private Bank, Bank Nifty, and CNX Finance, they all have a certain degree of relative strength. They have been losing a bit of momentum and now they've just started to pick up. Price-wise, honestly, not that great. Same story with the Private Bank. It's just picking up. If you can see the curve, it has just started to pick up. We saw metal, we saw IT. Now we are looking at Private Bank. That is Bank Nifty also. And financial services will give you similar kind of a picture. I'm going to add mid-cap to this also. Mid-cap is anyways angling down. So that's not as good as financials, Bank Nifty, or Private Bank. They've just started to bend up on the upside. RRG readings that we have done so far at this point are actually encouraging. We can see a revival reversal. We can, but price dictates everything. So If next week we see the Nifty, and our call is Nifty has to cross Friday's high. If and only if you see Nifty recovering above Friday's high, do quickly check, is this bounce back, is this short-term strength coming from any of the strong sectors or not, especially banks, private banks, financials, IT, metals. They're anyways doing good, so few of them will be stretched, but fresh movement. If you find, yeah, the bank Nifty is moving, yes, within the bank Nifty, the private banks are moving, that's a good sign because you have the support of RRG. No clue what will happen, but this is how we are positioning our mindset. So, bank Nifty, private bank, and financials. Let's quickly take a look at bank Nifty. Bank Nifty is buying time. Bank Nifty is definitely buying time. Big shadows on the downside, on the upside. We should not forget that it's sitting on a divergence. It makes last week's low extremely important. And we can clearly see it has a range, it has a support zone. So this zone breakdown has become extremely important for any bearishness. What is the good thing? The good thing is the current close is significantly away from the breakdown point. Our breakdown point is this. Below this, things looks bad. But where we have closed on Friday, we are quite a bit away. So we can still continue to buy some time and oscillate and stay range. So Bank Nifty, we kept a green flag because even till last week we had a positive state of flow, but that's gone. You see a doji like Heikin, you see long lower shadows. It had gone all the way down here, now bouncing back. So from the weekly chart, price wise, no, it's not bullish. Not bullish does not mean bearish. It's neutral. RRG, good. Price on the weekly, neutral. Price on the daily has just started to pick up, nothing, neutral. We also have this NCD, this negative divergence to deal with. So I have around 60-65% markers positive, 30-35% markers not so positive, not bearish, not so positive. So I think we should take the flag off. We should be a little neutral. I'm deciding our views or strategies based on the index. When you drop down to the individual sectors, stocks, you might find XYZ, ABC stocks exceptionally beautifully placed. Maybe on the upside, maybe on the downside, right? But the sector per se, the index per se looks like it's at crossroad. The best thing is the Friday's close. It's so close to picking up, moving further up, negating this divergence. If it negates this one, we're going to have a beautiful move on the upside. We should have a beautiful move. So the neutral flag of Bank Nifty and the neutral flag of IT is in similar lines. You just want to wait out for the positivity to get back across both the time frames. So private banks, we had kept a green flag just like the Bank Nifty, but this week also the state of flow is gone. The range bound price behavior is very, very obvious. We can see that. And so let's take it off also. One thing I'll add again, because IT, banks, they are all on the leading quadrant of RRG. They all have a promising positioning for going upside, for going further upsides. So all that you have to keep in mind is if the market goes above Friday's high, if the Bank Nifty goes up and gives me a breakout, is it coming from the private banks or not? Is it coming from these names or not? If it comes from these names, it's actually good because they are relatively stronger in terms of relative strength and they have their weightage. So it's all well positioned for the market to break out, to bounce back. Whether it will happen or not, that only time will tell us. PSU Bank and Auto are in the weakening quadrant. Auto and metal, both of them were falling down like this. Metal has given a U-turn. Auto has just started, but it has not given us a U-turn, complete U-turn yet. Okay, it has lost momentum, but if you see, it has also going right to left. Going right to left means losing relative strength also. So auto, if we take a look at CNX auto, till last week things were beautiful, and after a positive, beautiful looking Heikin, straight away a negative looking Heikin, it means the sector must have fallen sharp. Yes, the sector has fallen sharp. So the state of flow has gone away. RRG is dicey because we need the RRG to turn around. It's not turning around. It's just gone up and gone, is going right to left. That's not a very good sign. Daily is anyways negative. So we have to take the flag off auto. We are not we are not having a bullish strategy on the auto. Again, I'll repeat, just because it's not bullish does not mean it's bearish. It's just those transit period. So it's the neutral. Who else was there in the weakening? This PSU Bank. So PSU Bank, huge relative strength, the maximum relative strength, buying some time and just started to bounce back also. This is a sector which has shown strength. We have continued to keep a green flag, and it has continued to show really, really good strength. State of flow positive, state of flow positive. We don't have any, don't have to do much about it. All that I have suggested and requested is just look for some pullbacks, look for short term oversold readings. That should be good enough, and we maintain that. Now let's come to the lagging quadrant. Quite a bit of names in the lagging quadrant. And PSE, public sector enterprise, U-turn, interesting. Media, not very interesting in the sense the momentum wise it's going up. So might be a couple of stocks showing some revival. Small cap, pretty much weak, but picking up momentum, not bad. Consumer durables, similar story, picking up the momentum of relative strength. Energy, no. Energy is angling down. Realty, no. Realty, like energy, both these sectors are angling down, weak. And FMCG. So let's start with FMCG. Let's discuss FMCG, realty, and energy, the bottom three, where the RRG is clearly weak. FMCG, we were anyways red flagged. I don't see anything on my chart based on which I can even remove the flag. So FMCG is clear cut. You can see on both the time frames weak. Energy, we were hopeful that it will give us some kind of a breakout because of the state of flow and the volatility we saw last week. This week, it has fallen sharp. It has reversed. It has taken the state of flow out. State of flow is neutral. Daily chart has gone down. RRG is also not bad. Sorry, it's not bad means it's bad. So energy has to go away. The flag has to go away. Why are we not giving it a red flag? We would like to see the state of flow going red. We would want that confirmation from price. Now, RRG or relative strength is weak. Daily chart is weak. Weekly chart has just started to fall because of the daily chart. So the fact that there's a high chance of this continuing further on the downside, and you have the relative strength on the negative. So ideally, we should not wait for the red dot to come, because if the market falls, which is if this index falls, high chance we will get the red dot. So energy needs to go red, primarily because of relative strength. So you have FMCG, energy, and realty was another one, which was red, which was weak in terms of relative strength. So same logic, just like energy, realty will also go red. One should be looking out primarily for pullbacks and then shorting opportunities if you are in the derivative segment. For long only traders, you stay away. The others, which were just improving a little bit, that is consumer durables, small cap, media, and PSE. Let's take a look at consumer durables, showing a bit of promise couple of weeks back, and the weekly had turned good, but weekly neutral, nothing much. Daily has come out. It's actually quite jumbled up, quite unsure. Last week's high, very important. So we maintain a neutral. There's not much clarity. Relative strength is not good. Momentum is picking up. Weekly had picked up and fallen. Sharp move up and sharp move down. Why will I want to bother myself in a sector or a chart which is in itself not clear where it wants to go? So leave it. Media, not a big fan of media, but yeah, let's maintain a neutral view. Public sector enterprise, we had kept a green flag because of the state of flow green. It has given us a deepish pullback. Okay. Daily state of flow has improved. I think we should keep it green. We should be on the lookout. PAC is not a sector, it's like a theme. Within PAC, you might get banks, defense, anything, energy. So you just have to pick up that which PAC stock is giving me a good sign. So PAC, we will maintain a green flag. Um, are we missing out on anyone? Let me just quickly check. PAC, media, small cap, we have discussed, consumer. So all done in the lagging. Now we are left with the improving, which is pharma. Pharma is actually, it is there in the improving because of its positioning. But to be honest, it's nowhere. It's so close to the 0 point. So it does not have a lot of relative strength or a lot of underperformance. So it's not there. It's also angling down. To be honest, it is in the improving quadrant, but the angle is not good. Angle is on the downside. Pharma, PAC, and energy, these three sectors were looking good for a breakout. Pharma did give us a breakout. Remember this one last week, last to last week? And then it failed miserably. This is a breakout failure of a classic proportion. RRG, not that great. Weekly, neutral. Daily, negative. So from a green flag, we have to take it off. We have to just stay away. We were waiting and hoping that this breakout that it gave, as it was pulling back, as it was throwing back, will it find some support and bounce back again? That was the hope. But no, price has a different story to share with us. And pharma, we are going off. Now, apart from those, I think 10 sectors or 11 sectors, there are 5 more, which are not there in RRG, but I'll cover with the charts. Number 1, chemical. Chemical is relatively less data, so we do not talk much about it. We just look at it, and it seems doesn't look that great. Capital market picked up yesterday's trade. Still very much range bound. Don't have clarity. You see, how can you get directional understanding or confidence from a sector which is behaving like this? So we wanted to stay away, and for whatever good reason, because any move had seen retracement and all of a sudden a sharp move. Let it find some traction. Let it find some traction which will look like this or something. Then only we will be interested. So stay away capital market. Defense. Defense, we had kept a green flag. Why? Because it's been improving for the last few weeks. Last week was more like a consolidation. Daily is giving you an oversold reading. This is a very interesting chart. I do not have the RRG of defense because Strike does not have that sector. But this is a very interesting sector going forward. Your level should be especially last week's high. So you have to look out at those stocks where you have strength as well as directional clarity from the weekly. If those stocks have given you any kind of a short-term correction or not, and will it revive and bounce back? This is an interesting sector for next week. I hope we had the RRG. The discussion would have been much better. Digital had its share of sharp correction. And so because of that sharp correction, the state of flow had gone negative. It is still negative, back to back 2 bearish Heikin. So the move has come primarily in the IT, and the non-IT, ex-IT digital names are probably not doing that great. Weekly state of flow is negative, so we are straight away going with a negative flag. And then finally, tourism. I don't think I have to say anything. You can right away say it, why it should have a red flag. So before I finish, we discuss the sectors and we give weightages to 3 key elements. Of course, relative strength with the help of RRG. Then we take a look at the weekly chart, state of flow, divergences, etc. And the same thing we'll do for the daily. Importance is given primarily to the weekly and relative strength, not the daily, because daily is the short term in this way of analysis. And so based on this, wherever we find the weekly in our favor, and with that, whether we have strength or not, based on that logic, we flag it. Now, few green flags wherein we have strength, like metals, PSU Bank, Few green flags where there can be a turnaround, like the finance and defense. Few have gone neutral, so we need to just step back with a positive state of mind, like the bank Nifty, the private banks, the ITs. Positive state of mind, and hopefully they will continue further. And few are clearly red and out, so we don't want to bother ourselves. Few have given breakout failures, like the Nifty has given a failure, Pharma has given a breakout failure. Few have even failed to give us a breakout, like the energy or the PSU. So it's going to stay like this. Overall, I don't think it's a great market for any trader. You need to be on your toes and be agile. Friday's high is important from any kind of short term sentiment point of view. Last year was a year of commodities, and this year also very clearly gold and silver, both of them are still holding exceptionally strong. Nothing that I can comment on the fact that they are stretched. Yes, a copper is consolidating on the higher time frames, on the lower time frames, but the higher time frame still is exceptionally strong. So one should maintain a bullish bias and preferably try and trade pullbacks, try and wait for the prices to come down. Crude is the one that gave a spike last week, and it did take out all of a sudden few highs, and it's pulling back. Who knows? Maybe we can get some move. But crude has particularly been, long term directional less, medium term to short term, few spots on the upside and then fall. So not great for trading. You can just track crude and understand what crude is doing and align with some geopolitical tensions outside and maybe some inflation levels and all that, but not a very good looking chart to trade. So the metals continues to dominate. USD, which was at 90 and little above 90, has given a spike and moved towards 90, 90 and a half, 90.66, back to an all-time high for the dollar or an all-time low for the rupee. Not good. So that's it. That's what it is. I'll sum it up by saying that if you're a long-only trader, lay low, not do much. You can switch on your contrarian mode and look for some contrarian trades in your long-term portfolio. Your momentum trading portfolio, you need to be very, very selective. Derivatives trader are always the busy ones throughout the year, irrespective of uptrend or downtrend. And I think you will have to try and nibble on both the sides. It's difficult because this is where the long trade can also get stopped out and the short trade can also get stopped out. And that is the reason why I'm saying that keep your expectation limited. This is not the market where you will hit a home run. This is a market which is a little difficult. So singles, take some small runs, quick individual runs are actually what is needed. So thank you. That's my take on the entire Nifty and the sectors and strategy for the week ahead. Now let's take a look at your conceptual doubts.